Thank you, Chris Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal Book discussed a policy of looking through any new tariffs as long as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point, and I would just say, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And there were two simulations. One was seeing through, one was not. And I'd point you to, there's some language in the see-through paragraph that says, that considers situations in which it might be appropriate to see through inflation, and then name some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect tariffs can affect inflation in the economy, and how to think about that. So we've done a good bit of work, all of us have, each of us has, and it puts us in position when we finally do see what the actual policies are to make a more careful, thoughtful assessment of what might be appropriate policy.
Great. And just a quick follow-up. Given the recent bout of inflation that we've been through, with consumers seeing how prices can rise and businesses seeing that they can raise prices, at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen the past few years?
The main thing is, and this is also a point in these alternative simulations, is there are just many factors that go into how much tariffs.
This is like a stagflation
or consumer inflation. How persistent will that be? And so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. We pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that. That may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection
check 1 2
for 25, so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers. So we have inflation coming down, core inflation coming down to 2.5 next year. That'd be significant progress. You see a slower path. I think that does take on board that we want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but it would be better than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling, so far in an orderly, gradual way. But it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement, which has been used at times in the past when the committee thinks maybe it's going to be on hold for a while, and they said, gee, this looks like it could be the last rate cut for some time, would they be mistaken to infer that?
So that's not any decision that we've made at all. Let me explain extent and timing. So the sense of that wording is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly that distance has shrunk by 100 basis points. So significantly smaller. So that's the extent question. And we're going to be looking for further progress on inflation as well as a strong labor
versus
market
pause
to make those cuts. Timing just suggests again that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the longer run. We're trying to make sensible policy as we go. And I just would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects have. We'll have a much clearer picture, I think, when that happens.
Oh boy, everybody's really going to need the Trumponomics course after this freaking crap show.
Even though you've cut rates by 100 basis points this year, we haven't seen much change in mortgages, auto loan rates, or credit card
real rates, baby.
You say you're significantly restrictive. Are you running a risk that the markets are fighting against you and the economy could be more at risk of a slowdown than you anticipate?
Yes.
So the rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%.
Oh boy.
Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's no reason to think a downturn is any more likely than it usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policies so that we can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market pretty close to where it is. We're pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts, included the phrase, we need to have confidence that inflation is moving down towards our target. Given the fact that you've raised your forecast for next year, do you have confidence or are you uncertain about the path of inflation going forward?
So confidence was our test for rates, and we've made look at the broader sweep. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that we have been for headline inflation. So I would say I'm confident that inflation has come down a great deal, and I'm confident in the story about why it's come down and why that portends well. And I'll tell you why. You do see with housing services inflation, which is one that we've really worried about, it really has come down now quite steadily at a slower pace than we thought 2 years ago, but it's nonetheless steadily coming down as market rents start to equilibrate better with new leases that turn over, not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars. That should generally be in the range it was in. That leaves non-housing services, and market-based non-housing services are in good shape. It's non-market that are imputed rather than measured, and they don't. We think they don't really tell us much about the about tightness in the economy. They don't really reflect that. I mean, a good example is financial services, which is really done off of asset prices. And that's how that inflation works. So the overall picture, the story of why inflation should be coming down, is still intact. In particular, the labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source of inflationary pressures. Not to say there aren't regional and particular professions where labor is tight. But overall, you're not getting inflationary impulses of any significance from the labor market. So what's the story? This from these large shocks that the economy got in 2021 and 22 in, for example, housing services, and now also in insurance in particular, where reflected later in housing insurance. It's real inflation, but it doesn't portend persistently high inflation. So we and most other forecasters still feel that we're on track to get down to 2%. It might take another year or two from here, but I'm confident that that's the path we're on. And, our policy will do everything it can to assure that that is the case.
Colby. Thank you. Colby Smith with the Financial Times. So the unemployment rate as of November, while still very low, is within spitting distance of the level that generated a lot of concern about the labor market over the summer in the lead up to the 50 basis point cut in September. Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the committee's assessment
She
of the
assumed
risks?
the skipping. Let's see if Powell addresses
Less
that.
concern now on that front, or is it just about there being more upside risk?
Watch, he'll clean that up right
that
away.
needs to be accounted for.
Of course he will.
The unemployment rate is now the same as it was in July, 4.2%. It's moved up and down, but it's now the same as July. And job creation is lower than it has been, but it's been steady. It's not declining. It's steady at a level which, as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far below. So you might if we have the break-even level right, and if job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So gradually declining. We don't have that kind of precision in this. So but you're right, though, and I read out some of the reasons. We do think the labor market is still cooling by many measures, and we're watching that closely. It's not cooling in a quick or in a way that really raises concerns. I think you pointed out participants in the FOMC really thought that the risks and uncertainty had improved relative to the labor market, and it's because things have just gotten a little bit better. It doesn't, the unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening in the labor market is welcome here, what's to prevent that from happening if rates are still restrictive?
So what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying. Not that it's not welcome. We don't need it, we don't think. If you had a situation where inflation is moving around by a tenth every few months, that's, we'd have to weigh that against the fact that inflation has in recent months been moving sideways in the 12-month window. And so we've got to weigh them both. And at this point, for a while there, we were only really focused, mainly focused on inflation. We've now gotten to a place where the risks of the two are we think are roughly in balance. And so that's how we think about it.
Steve.
Mr. Chairman, I did not hear you use the word recalibration today.
And I'm just wondering if the recalibration phase is over and what you might call this new phase, and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are though in a new phase in the
Mandatory
process,
recalibration.
as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation, and that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
I wonder if I could follow up and ask you how much you or the committee are looking through some of the high numbers we've had in the recent inflation numbers. For example, cars being up maybe because of the hurricanes, eggs because of the avian flu, that kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent report.
So we always try to be careful about not throwing out the numbers we don't like. It's just an occupational hazard is to look, those high months are wrong. What about the low months? We have a very low month potentially in November. It's estimated by many to be in the mid-teens for core PCE. So that could be idiosyncratically low. We try to look at not just a couple or 3 months. We shouldn't have our position shouldn't change based on 2 or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do, though, is how we're looking at it, and we need policy to remain restrictive to get that work done, we think.
Neil.
Thanks, Chair. Thank you, Chair Powell. Neil Irwin from Axios. Financial markets have been very buoyant really all year. Is the committee comfortable with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
So we do look carefully at financial conditions, of course, that's part of what we do, but we really look carefully at is the performance of our goal variables and how are we affecting the economy. So what we've seen over the course of, just take the last year, we've seen inflation, over the last couple of years come down a lot. We've seen the labor market cool off quite a bit. That suggests that our policy is restrictive. We can also look more directly at the parts of the economy that are affected by that are interest sensitive, like particularly housing. Housing activity is very low, and that's partly significantly because of our policy. So we think our policy is working, it's transmitting, and it's having the effects on our goal variables that we would want. A lot of things move financial conditions around, as you know, and we don't really control those. But I'd say we see the effects we're hoping to see on the goal variables.
Well, I would say that the synopsis of the market going down today, if you traded with me live this morning, was accurate.
Oh,
horrible.
So
bad question too.
We're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking.
Powell
for
has like half of his
That's the kind of thing
entire
for
net
Congress
worth
to
in
consider,
Bitcoin.
but we are not looking.
You'll never
for
know that.
a law change
That'll never be
for the
proven.
Happy holidays, Mr. Chairman. Thanks for taking our questions. I was wondering if you are satisfied
Market's
with the
still
way
looking weak.
2024 is ending.
Nasdaq's still looking like it's gonna
avoided the recession that
pop through this shelf
forecasters,
on the
were
4-hour time
predicting
frame.
as inevitable a couple years ago.
Still, you can't look at this and
I think
say
it's pretty clear
anything
we've
other
avoided
than there's a
recession.
news
I
event
think
so
growth
far.
this
Previous
year
daily
has
low
been
down here. This is
Yes.
back. This is Fridays.
PDFP,
Fridays low.
private domestic
So
final purchases, which we think is the best indicator of private demand, is looking to come in around 3% this year. This is a really good number. Again, the U.S. economy has just been remarkable, and it's in these international meetings that I attend, this has been the story. is that how well the U.S. is doing. If you look around the world, there's just a lot of slow growth and continuous struggle with inflation. I feel very good about where the economy is and the performance of the economy, and we want to keep that going.
The other thing I just wanted to ask about was the you guys have noted that the unemployment rate is still low. However, employment rates have fallen rather quickly. The prime age employment rate has fell by about half a percent rather recently. The question, I guess, is, do you think there's maybe more downside momentum in the labor market than the unemployment rate alone is signaling?
I don't think so. No, I think overall, if you look at it, prime age participation is still very high. What's going on in the labor market is that the hiring rate is low.
Yeah, here comes Tesla's fade back down to prior shelf, prior swing high.
And layoffs are very low.
Daily time frame,
so
man.
people are not losing their
Scared
jobs in
that
large
was
numbers, unusually large numbers.
What goes
If
up
you
must
are
come
looking for
down.
a job, though, the hiring rate is low, and that's a signal of lower demand. It has come down. So we look for signs like that, and that's clearly a sign of softening, further softening. I didn't mention it earlier, but
little by little,
I think you can see an ongoing gradual softening in the labor market. Again,
USD JPY still strong. Look at that.
2% inflation. And
Still
that's
going.
part of the reason that explains why we moved ahead today with the action
Gold
with an
down.
additional cut.
Arrow.
So, but
Look.
you take a step back, the level of
Down.
unemployment is very low. Again,
Hit the
participation
liquidity
is
levels
high.
that we drew out this
Wages
morning.
are at a healthy and ever more sustainable level.
Very
wage
nice,
growth.
very nice.
And so the labor market, this is a good labor market, and we want to keep it that way.
Amira.
Thank you, Amara Mokway from Bloomberg News. I just want to put a finer point on the labor market. Can you keep the labor market this way, in the strong position that you have described, without further cuts? In other words, do you still view the labor market as needing support to protect against the further cooling?
We can't know that with any tremendous certainty. I will say that we think that our policy balances the risks. We think the risks are roughly in balance as between the two mandates. And we think the labor market is in solid shape. And when I say it's softening or cooling, it's a very gradual process. Job creations are meaningfully positive. Wages are, if anything, still a bit above what would be sustainable if productivity were to revert to its longer run trend. If you take into account the high productivity readings we've
Why does
had,
this feel like the
wages
top
are
for
already
me?
at a sustainable level relative to 2% inflation. So I don't want to overstate the downside in the labor market, because if the downside clearly appear to have
S&P taking
diminished.
out Friday's lows.
Nonetheless, it's one
still
of our
cruising.
mandate goals, and we pay close attention to it. And it's worth noting that it is still gradually cooling, gradually and in an orderly way. And that's how I would characterize it, and that's why
The Nasdaq just hasn't gotten there yet. Interesting. If the Nasdaq doesn't take it out,
Thanks so much, Chair
we could be
Powell.
looking at a
Elizabeth
nice little
Schulze
bounce
from
here.
ABC News. As you've noted, the Fed is now forecasting
see.
higher inflation next year. High prices are still a burden for so many households right now.
Bitcoin.
Why do you think it is that inflation is proving to be more stubborn than you'd expected?
It breaks down into a long answer if you want, but it just has been a little bit more stubborn. I think if you go back 2 or 3 years, many people were
What's going on,
saying that
guys?
to get this far down, we would have
Got
had
Jerome
to have
Powell
had a
speaking right
deep
now,
recession
just
and,
checking it out.
high unemployment by now. Well,
Looking
that
at
has
the
not
charts.
been the case. So
If you want me to look something up,
path
let me know.
down has actually been much better.
Right
than
now, it's
many
wait and see
predicted.
mode.
We've managed to have the unemployment rate remain essentially at its longer run natural rate, while inflation has come down from, core PCE inflation has come down from 5.6% to 2.8% on a 12-month basis. So that's a pretty good outcome. Why hasn't it come down? One reason is that just a technical issue around the way we calculate housing services, and that process has been slower than market rents are showing up more slowly in that measure than we might have thought 2 years ago. So that's part of it. I think there are other parts of the story, but what I think people are feeling right now is the effect of high prices, not high inflation. So we understand very well that
A
prices.
little bit of a hidden bullish divergence on money flow. So just kind of waiting to see if the other signs link up here. We are at a high time frame liquidity level.
In that burst of inflation that was very global. This was everywhere in all the advanced economies at the same time. So now we have inflation itself is way down, but people are still feeling high prices. And that is really what people are feeling. The best we can do for them, and that's who we work for, is to get inflation back down to its target and keep it there so that people are earning, big real wage increases so that their wages are going up, their compensation is going up faster than inflation year upon year upon year. And that's what will restore people's good feeling about the economy. That's what it will take, and that's what we're aiming for.
And as we look ahead to next year, what do you see as the biggest challenge to the economy under the next administration?
I feel very good about where the economy is. Honestly, I'm very optimistic about the economy, and we're in a really good place. Our policy's in a really good place. I expect another good year next year.
Oh no.
Thanks, Chair Powell, for doing the questions.
Powell?
Edward Lawrence from Fox Business. So you say that we're closer to the neutral rate. What percent do you see and the committee believes? Where is that neutral rate?
So I'll say a couple of things. First of all, when we write, the thing we write down in the summary of economic projections is the longer run neutral rate, which is the neutral rate at a time when supply and demand are in balance, the full economy is in balance, and no shocks are hitting the economy. That is not where we are right now. So when we're making monetary policy at the Fed, that's not the question we're asking. So you can't do a straight read between those longer run numbers that we write down and what we think the appropriate policy should be. So basically, at any given time, various shocks are hitting the economy. And so what we're doing in real time is we're looking at our policy stance and we're looking at the way it's hitting the economy. And particularly, we look at the effects it's having as we try to move the economy toward maximum employment and price stability. And the answer can be, there are things that affect the economy that are lasting, but not permanent. And the ones that are permanent are the ones that would be in our star. The ones that could be lasting, but nonetheless go away over time, they could actually affect what's sort of technically the appropriate neutral stance in near term. So we're looking at that, and we don't know exactly where it is, but as I like to say, we know it by its works. And I think what we know for sure is that we're 100 basis points closer to it right now. There are many estimates of where that might be, and we know we're a lot closer to it. And I think we're in a good place, but I think from here, it's a new phase, and we're going to be, cautious about further cuts.
But I think that the markets are looking for a little more clarity. I mean, I've heard estimates from 2.9% to 4%. I think the markets would like to see a little more clarity about a year out, 18 months out, as to where that goalpost, for lack of a better term, is, because at the moment it looks big.
Yeah, I mean, honestly, there are countless models of what a neutral rate might be at any given time. There are empirical models, there are theoretical models, there are things that combine them, and they have as many different answers as you'd like. So there is no real certainty. And I mean, it's actually a good thing to know that we don't know exactly where it is. So you're not tempted to think, oh, I think this model or this estimate is right. You just have to be open to, the empirical data that are coming in and also how it's affecting the outlook. And it's not made any easier by the fact that, that our policy works with long and variable lags. Nonetheless, that is the job we have. And so I think it's appropriate for us now to proceed.
A little bit of divergence
now that we're
on this lower time frame.
Closer to neutral.
Waiting to see if this
we'll do
ends
so.
up playing
Meanwhile,
out.
The economy seems to be in
I'll point it
good
out
shape, and
as
these
it develops.
cuts will certainly help to support economic
Oversold,
activity in the
obviously.
labor market, while we can still make progress on inflation because policy is still meaningfully restrictive.
Victoria.
Drop a like, y'all.
Hi, Victoria Guida with Politico. I just wanted to make sure I understood what you were saying at the beginning about inflation. Are you saying that progress on core PCE counts as progress on inflation, even if headline inflation ticks up? And then also, since that's
We're not trying to catch a falling knife
SCP,
here.
I
We're
was
gonna wait.
wondering, what accounts for that? Why do you all see core PCE?
May
going
not find
down
anything,
and,
but we definitely. We're way oversold.
Headline inflation ticking up.
So, and as I imagine the the goal overall is headline inflation because that's what people experience. People don't experience core inflation; they experience inflation.
Minimizing
that
this.
includes food.
You guys don't
and
care
energy
about that,
costs.
right?
So that's the overall goal.
I'm minimizing
But,
me too.
As we know,
We want to see the charts, man.
headline inflation contains energy and food, and those prices can fluctuate for reasons that are not related to tightness in the economy, and therefore
Look at this
are
1
not
hour
really
candle.
good
2 1 hour
predictors of
candles
future
in a
inflation.
row.
So it turns
Nice
out that
volume.
core inflation is a
Oversold.
better predictor of
Look at the
overall
volume flow.
inflation than overall inflation is. So we look at core inflation because it's a better measure of what future inflation is like to be.
It's not under this prior swing
It's a
point.
better measure of what inflation pressures exist. So that's it's complicated, but ultimately our goal is headline, not core. So your question was,
That's
your
up
second
here.
question was what?
Why do you all see core going down, but headline potentially
Let's see
taking
what
up?
the 15
So
minutes
headline can be affected. You're talking about next year.
Mm-hmm.
Yeah. So headline can be affected by energy prices and food prices. So that there will be things in the headline forecast that are to do with forecasts of energy prices, whereas core will be, if you look at core going out a full year, then it'll be much more driven by things like tightness in the economy. So that's why the two can go in different directions. Headline has been lower, as you know, most of this year, but that's because energy prices have been coming down, which is a great thing for people, but energy prices will come down and then they will go up, and it won't really be telling us anything about how tight the economy is and how future inflation will perform.
Do geopolitical risks factor in at all to how you're thinking about energy
So
prices?
we monitor geopolitical risks really quickly, but really carefully rather. But I would say so far those risks nothing has come out of those risks that has really been important for the United States economy. The single thing that you would look to is the price of oil, given that we're talking about the Middle East and Ukraine, but that is a good summary statistic for the kind of thing that could go wrong with global turmoil. But the price of oil has been coming down, and because of global supply conditions. So the U.S. is not feeling really the effects of geopolitical turmoil, but we are certainly at a time
Still
of
dropping.
elevated geopolitical turmoil.
Still dropping.
And it remains a risk.
Wow.
Thanks,
Bro,
Chair
this is going
Powell.
on
Kelly
forever.
O'Grady from CBS News. I want to go back to something that you said a minute ago, that wage growth is outpacing inflation now. It wasn't the case for some time, of course. It's partly why Americans haven't
Where'd she
felt
come
much
from?
relief in their wallets from prices yet. But with inflation ticking up, how worried are you the progress in closing that gap could go away?
Yeah. So inflation, again, we don't overreact to a couple of months of higher readings or a couple of months of lower readings. And what we had was we had 4 months of really nice readings, and then September and October were higher, but then November is much lower. So I don't
No,
really
it's
think
not.
the public is experiencing that as
Tell him, Kev.
a surprising
Tell him.
upside risk to inflation. I think inflation is much
No,
lower.
pal,
What the
you're
public is
wrong.
feeling, and
You
they're worried
a-hole.
about it, is that prices are just the price level went up because
Smash
of
the
past
like
inflation.
button if you
It's
think
going to take
Pal's
some
wrong.
time
You're just
for
wrong,
real
bro.
wages to recover over a
Screw
period of
you.
years in which
And your
real
anti-Bitcoin
compensation is
rhetoric.
growing. And in other words, your
I don't know what I'm
compensation is
talking
growing
about.
meaningfully faster than
Garbage.
inflation. That's exactly the kind of
Garbage. I agree. Garbage.
we just want to hold on to it. That
Garbage.
process will probably take some years, but that's what's going on. Right
Agreed,
now.
Kevin.
And,
I'm
I
with
don't
you.
think that, a couple of months of
I'm with
inflation will
you.
signal,
Give me a
that anything that the nation is
trade.
adjusting.
Give me a
And
trade.
just one
Set
follow-up.
up.
Let's look more long-term. You previously predicted hitting the 2%
Come on.
inflation target
Come
in
on.
2026. It's now been pushed out to 2027.
I usually don't say
You
this,
said you're focused on enabling
but
further progress.
we are going to try to catch a falling knife. Smash the like button if you want to catch the knife. I'm just playing.
Out 2 years out.
I'll shut up
Talking
now.
about high uncertainty, very high uncertainty.
He's just so freaking boring, man.
At that
I don't know what to
point,
tell you.
It's not.
If you like
it's
boring
not possible to
crap,
confidently
then
predict
keep
what the
listening.
economy is gonna be in
We
3
do have a
years. So
smaller
what we're doing
time
is we're looking
frame
at what's
divergence
now. We're
happening
kind of
here.
Projecting that the same kinds of
I'm going
things
to turn it
will
down.
happen. So
We do have a smaller time frame
labor
divergence.
housing services
Let's look at it.
inflation comes
What do we
down,
got?
goods inflation settles.
Hold on. I need 5 likes to proceed.
Non-market services
We're only at 2?
return to
What the hell?
prior level.
What's wrong with you
All
people?
those things should happen over time.
We had a winning trade this morning. Were you not here?
There's every reason to think that they will. Timing of it,
Oh, yeah, we're looking like this could be a bound city.
It has been slower than we had hoped. Nonetheless, we're still on track. And I think if 2 years ago you'd said we were at 4.2% unemployment and 2.8% inflation, people would say, "I'll take that." I mean, that's a pretty good interim place to be. Job's not done, but I think we're feeling good about where we are and where we're headed.
Feel good about where we are. If you feel good about where we are, where we're headed.
Hi, Chair Powell, Nancy Marshall-Genzer from Marketplace. You said a couple times
You know what to do.
inflation has been moving sideways.
Nice angle.
Appears to be settling in around, 2.5%. Do you think the Fed is just going to have to settle for that and accept that you're not going to get to your 2% target?
No, we're not going to settle for that. I think we certainly have every intention and expectation that we'll get inflation back sustainably to 2%.
Dumb indeed.
I'm confident we will achieve that. It has taken longer, but it's we are making progress. We have made a great deal of progress, and we'll continue to do so.
Yeah, lady, we're gonna give up.
The public,
Yeah.
We're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things.
Good follow-up.
In or out in this world.
Let's see where
that doesn't appear to be a likely outcome. I think we're at 4.3%. That's
Man, that previous daily low, Friday's low, just seems like such a sexy target. That's where all the liquidity is at.
While keeping a strong labor market.
This is definitely some institutional selling, obviously. Also mixed with a thinner, potentially thinner order book. I don't know. All right.
Is really pissed about Powell. What the market is not pissed about is this awesome.
All right, me, Kevin. Just relax on your sales, okay? You'll get enough sales. Don't worry. Yeah. Pow this, pow that. Next. What's the chart saying? Well, news kind of messes things up a little bit, but we're going to dive in. I'll look at one time frame. I'm going to look at the 5-minute time frame. All right. What happened? We took out previous daily low. We took out the equal lows from this morning. This was a target. This was easily hit. Right when the 0.25 rate cut was announced. So this is like right at news. And if you were trading with me this morning, you would have heard me say that the market has already sort of priced in this 0.25 cut. So I really don't see a catalyst. We can't go up forever, folks. So maybe you could read into this more like me, Kevin, and maybe the cause for not reducing rates as fast is there. But overall, you got the 2.5 cut. I don't know what else you're looking for, market. It's just overbought. That's it. There's really not much else to say about it. You go up to this 4 hour. We kind of cooled down. The daily, we're hot. You can see it right here. We're hot. We've gone up. I don't even need to look at these to see that we've gone up too much. All right, we got to give some back. Let people get in, man. It's that simple. So what's the target? That's the question, because we blew through this 4-hour shelf, and I put this on the board this morning, and I told everyone that this is an area to look for potential divergences. Price could definitely bounce from there, but it's just not looking. It's not looking good. It's looking like she wants more, folks. So what is more? More is Friday's low. More is prior 4-hour shelf down here. So right now, sort of giving up the gains from basically a day last week. It's really not that big of a deal. The pullback here is what, 2%? Yeah, 2%, 2.5, whatever. 3% is considered a pullback. So, all-in-one 4-hour candle is kind of excessive, if you will. But this is only, well, I say only. That's 522-point candle right there. All right, so, I mean, we could stretch out to maybe 650, 700. That would be pretty wild for one 4-hour candle. That does not happen very often. In fact, I don't know if I've ever seen a 700-point 4-hour candle. I don't think I have. Maybe. Not recently. So I think she's going to overextend to grab this. And then I think she'll go back to equilibrium here to some degree. We're not just going to go straight down. But a lot of trap traders at the top here. The contract rollover gap has been filled. Hooray! If you trade futures, all is right in the world now. You don't have to worry about it. All right. Getting serious. Let's look here a little bit deeper. So 5-minute chart. This is going to show more of what is happening in the now. See, we're oversold. We're headed back up. You can see it in the money flow. I mean, we've way oversold, right? She's headed back up. So if this starts to cross this threshold line right here, all right, then we can consider this move kind of done. But I want to take a look at volume. Volume is on a downtrend. Last few 5-minute candles are on a downtrend. So you can see down here, right? A little bit of a downtrend. Nice steady volume and selling, honestly. This really, it's got to be much lower for me to consider this move done. So we could, I think this Friday low is still at play. This is still at risk. And then at this point, what is that, 20 points? Oh, no, it's still, geez. Wow, the move is big, folks. That's a big move. That's a big boy move. That's a big boy move. Hold on, getting a call from wifey. 1 second. Let me see what's going on. Sweetheart, I'm on live stream. You're live with your husband. What's up?
Hello. Well, are you going to be able to pick up Avery?
Am I going to pick up our daughter? Yes, I can pick her up.
Okay, cool. Because I'll be home soon. I just probably won't make it on time.
God, why do you sound so sexy? Are you going to be home like a little bit before I need to pick her up? Or? Oh, okay.
Not this time. Sorry.
All right, baby. Just get home, okay?
All right.
Is that it?
Bye. Have fun. Uh-huh.
I'm having a blast. All right, love you. Bye. Smash the like button for wifey. Come on. Let's go, folks. We're having a good time. Y'all doing all right? Hopefully you didn't, get wrapped up in this thing the wrong direction. Got to be careful. I did hit some balls at Topgolf, so I didn't trade this move. But, I mean, what was the move, Oh, we're going down? I mean, the only people knowing that are institutional traders at this point. There was high time frame SMT. Shout out to Troy. He said it. And here it is playing out. The hard part is knowing where to get in, All right. So, I'll put that away. How deep are we going to go? How deep is your love? Man, this volume is staying pretty steady right here, guys. Still going down. Really, I'm not going to open up the footprint charts. I don't think there's any need for that. But CBD, next leg lower. Price, leg lower. There's nothing to look at here, folks. Not yet. The only thing I am noticing is money flow index does have a divergence between, it's like a massive divergence. So I don't really want to point it out because it seems stupid at this point. News kind of can mess up the charts a little bit. You know what I'm saying? You might have an idea and then news hits and you're like, bam, smack in the face. So be careful. But yeah, essentially right now, nothing. I mean, if you short this, right, you're going with the trend. So good for you if you're shorting. Look at BTC fading back, hitting 100K again, going down to 100K. You got about $1,000. No, you don't. I lied. You got about $1,700. That's nothing. That's nothing. Let's go down to a 1 hour. Let's see where the the volume flow is going. Yeah, it still had a dead. Let's go to the 15-minute. Hold on. See how deep that is. Honestly, folks, like, I mean, I don't know what to say other than if this starts swinging up right here, this is a bullish divergence. So I mean, once again, the market still showing strength. I mean, Bitcoin's showing strength. So, I mean, it already completed its destiny here. You got volume flow under previous swing. All right. You already have a break of structure. Okay. So yeah. On the 4 hour, what do you got? Tell me, please. I'd love to hear it. Nothing. You got to pull back to a shelf. Here's your shelf, right? Elf on the shelf right there. Let me put the elf on it. Hang on. There you go. All right. Santa's happy. So you got the elf on the shelf. All right. So now what do you got? It doesn't respect the shelf. Well, you still got an order block down here. That hasn't been tapped. So this is your support. That's a major support level right there. That's your 100K psychological level. Now you give that up and, you know, your next support is a little further down. Okay. About 95K. But you go out to a daily and you still haven't broken support or structure. And for all we know, the last 30 minutes here, we'll see what happens. But we could turn up and end up bullish, respecting this shelf right here on the daily. You never know. You never know. Don't count your chips before all the cards are in. You know what I'm saying? Sometimes that river, got any poker players in the house? Sometimes that river will just, bam, give you the full house or shoot you dead. You know what I mean? That happens too. Gold looking like a sell. Still a sell. Poor gold. Glad I sold. Anyways, all right. What else are we looking at? Yeah, okay. Scenario 1 for Alphabet. Check it out. This is my first scenario. I already said that this would play out. And it you know, look, my little here. I'll undo. There's where it was. Let's zoom in. This was yesterday. Actually, it might have been a few days ago. It's on a 4 hour. I think it was, what day is this right here? It was Thursday of last week. Yeah, I do think I drew this out last week. But anyways, price came down, tapped, went back up. I'm going to say I get credit for scenario number 1 right here. Right? But that might have been the top, man. You never know. Scenario number 2, price fades back down to a level where some people never thought it would. But yeah, Alphabet cruising back down. This is the level that I think it could tap. I actually think there's a couple different scenarios that make sense from here. Middle of this 4 hour fair value gap could find a little bit of support and bounce from there as well. So I'll put that scenario on the board too. But you gotta have to go down to a low time frame and then find that setup. You know what I'm saying? All right. What else? Oh, Tesla. Here we go. I drew these out this morning. What did I tell y'all? Do I not get any love on this freaking platform? Come on. Do I not get any love for this? I called this morning, guys. Look, I said stack your orders. That's what I said. Did I not say that? Watch the video. It's on the live stream. Come on. I can't lie. I said it. I put it up here. That's solid, man. Back down. Scenario number 1, shelf 1. Scenario number 2, shelf 2. Both elves on the shelf. Too bad I don't trade stocks. I already made my $1,200 for the day. I haven't traded outside of that. I don't even think I will, unless I have a trade with you guys right now. We'll see. Still cruising down. Hit previous daily low. There you go. Wow, still oversold on that 5 minute too. So taking a look here at the 15. Now that's into oversold territory on the money flow index. Wow. Major sell-off, folks. Way oversold though. Way oversold. Doesn't mean she has to stop right now, but I'm looking for the signs, because you know what I'm saying? You know what I'm saying? How come y'all are so quiet, dude? Somebody say something. Anything. I'm going crazy. I think YouTube's lying to me. There are not 7 people here. I think you're lying, YouTube. Bullcrap. But just hop off, man. Get my neighbors to watch me. Hey guys, I'm on YouTube. Check it out. Want to make some money? I'll tell my next door neighbor Terry and his wife Kathy. They're both retired. They could use some extra income. Hey, just do what I say when I say it and put all of your money that you have in retirement on the line. Okay? Just do it. Just do it. Dude, y'all are quiet though. Sheesh. Tough crowd, man. Sheesh. Tough crowd. Golly. How many trades do you have to call live that are right? Live on YouTube before people go, oh, so like you're actually trading live. Oh, okay, yeah. Because I see all these other guys. Maybe they've just been doing it years and years and years and years on YouTube. I'm a 10-year-old veteran on here, Stuart. Been doing it 10 years. Finally got myself 300 people watching me. You definitely don't do YouTube trading for the views. You just don't do that. Because it ain't going to go viral, bro. I don't care if you win $1 bazillion in a trade. That ain't going viral. You know what I'm saying? Oh, man. Anyways. All right, got the 5, got the 1. I think I'm going to leave these two. Man. You could have shorted here for 50 points. You could have shorted here for 50 points. You could have shorted here. Just pick a place. Golly. I'm pretty sure that Troy texted me somewhere in here that that's the top. And I responded, what makes you think that? But had I just said, oh, all right, yeah, I'll short a little bit right there. Then that could have been a nice move. Could have been. Should have been. Could have, should have, would have. I got my little, fill for the day, but man, seeing this dump, doesn't it just make you want to go, yeah, let me just take a short right here. I'll just get in with the market. Yeah, just 40 more points. Yeah, that's it. That's it. Just give me those points, man. Dude. Aggressive selling. Aggressive. This is from the top. Holy mackerel. Hold on. Let me see this daily candle. Let me see this daily candle. Oh, my word. Is this the top, boys and girls? Holy crap. 870 points. Moving into 900, guys. I knew something was weird. I could just feel it, right? But, oh my gosh. I mean, you zoom out, find me a 900 point candle. I mean, you're not going to be able to do it. I mean, this is, like, here's one. When was this? Let's see. That's 860 points. Look at this. This is 890 points. Okay. This was September in 2022, and this was November of 2022. Interesting. Okay, so now we cruise over here, and we just haven't had, look, all this 2 years? 2 years? Dude, guys, 2 years. We haven't had this move in 2 years. This is a 900-point move, guys. This is moving into 1,000 points. Wow. History being made. And all you want to know is what to do. Or at least what I'm doing. Well, guess what? I'm not doing anything right now. Wow. Did I just miss the biggest move of the year? It's okay, though. I'm not mad at it. I just wish I was in. You know? Who doesn't? Damn. What's crazy about this move is that these 2 1-hour candles make up almost the entire move. Dude, that's wild. Boy, I don't know, man. I mean, she's way oversold, don't get me wrong, but this might be a knife I don't want to catch. You know what I mean? Sheesh. Sheesh on another level. Goodness. Oh, man. The momentum here. So, what's the deal? Did I miss something? I mean, we got a 0.25 rate cut. So what? Why is everyone so... This is like the Grinch right here, man. Come on. We don't want this. We want the Santa rally. We don't want the Grinch rally. Right, Stuart? Come on. Where's Santa? You guys want to see something funny? Check this out. All right. ChatGPT, right? Watch this. If you don't know about this, it's pretty funny. Let's see here. Okay.
How can I help today?
No, hold on. No, that's not it. It was a little Christmas thing. Hold on. Where did it go? What the heck? Hold on. I thought you could speak like Santa Claus.
Oh, Merry Christmas. How can I help you today, my dear friend?
They literally have a Santa Claus one, and I was just in here. Let me see. Where's it at? No. Oh, there it is. Yeah, there you go. Here we go. What's up, Santa?
Hello there. How are you today, my friend? Are you getting ready for the holiday season?
Yeah. Hey, listen. What happened to the Santa rally? Because the market is freaking taking right now.
Well, my friend, it seems the markets can be as unpredictable as a reindeer's flight path. But remember, the magic of the sea...
No, continue. I'm sorry.
No worries at all. As I was saying, the magic of the season is about joy and cheer. And even if the market...
Hold up. It's also about making money, Santa. So, no money, no presents. So, what's up with the market tanking right now? Do you know anything I don't?
Well, my friend, I may not have all the answers about the markets, but I do know that the true spirit of Christmas isn't about money. It's about kindness, generosity, and being with loved ones. So even if the market is a bit wobbly, let's focus on spreading joy.
I could dig that. Yeah, no, I could dig that, dog. All right. Sounds good, dog. Sounds good, Santa. I mean, Santa, yeah.
Glad to hear it. If you need any more holiday holiday cheer or advice, just let me know.
Now, you know, all of these voice chats are recorded and sent to OpenAI. So they know everything about you, man. Trust me. All right. Getting a little bit of a bounce here. Let's see what's going on. That's pretty creepy. A little bit creepy. I'm not going to lie. All right. So we got the 1. We got the 5. Look at the 5 minute here. Still suspect. Still outside of where I'd want it to be. 1 minute is pulling back in. And I told you, we got that little divergence that is happening, and it is playing out. So let's see here. That was right here. Right? Let me see. We had one here. We have one here. Gotta be careful. Gotta be careful in these areas, man. Yeah, we already fulfilled the destiny here, man. Like, price dipped where it should have. Yeah. Any deeper would be over here, and the waves just aren't there yet. So I'm looking for right here. That's what I'm looking at. Okay, so I'll put a little bit of an alert right there. If she gets there, okay, money flow, volume flow gets there. I mean, we're looking at potentially the daily fair value gap. Man, I can't talk. Daily fair value gap getting, was it filled? Let me see if it was filled. Was it filled? I don't think it was. No, it left a tiny little bit. So, you know, that's kind of, and you know what? That's the trend line. That's the 4-hour trend line. So, you know, she breaks that, and it might be a kind of a sad Christmas for, you know. Dang, can you imagine how many portfolios are down right now? I could tell you my friend is pretty happy about Tesla backing off with his covered calls. He's pretty happy about that. So there's that. Go back down to the 5 over here. All right, market's pulling back in right now. We're getting a little bit of a boost right now. Looks like that's panning out. Let's see. It's kind of a wonky time to trade because you got about 10 minutes before market closes. So I don't think we're going to find much of anything here, folks. It's way overextended. If anything, right now, I mean, you got to be looking for buys. You're in a discount on the day. You got to be. I mean, you just have to be. Oh, man. I just don't think we're going to have enough time. We might not have enough time here, folks. But NASDAQ looks pretty juicy for a quick long. Quick long on the nasty. Let me check it out. 15. Damn. Yeah, just not going to be enough time. I don't think there's going to be enough time. You could even look for like a 1 minute IFEG set. You don't even have it. You don't even have it. No. Nah. Trash that. Never mind. Bad idea. Look at where the money flows at. Right? It's above this level right here. You know? That's up here. So, long. To this level, right? You also have a couple of things. You're way overextended. higher time frames, overextended, 15-minute, overextended, snap back into some sort of equilibrium just makes sense at the end of the day. It just makes sense. How many points is, oh shit. Look at how many points that is. Oh my gosh. I thought that was a tiny little trade. I literally thought this was like, my gosh, dude, that is insane. 158 point. No, man. I'm looking at like, okay, this is a scalp. We're looking, look, hold on now. Hold on. Holy mackerel. These candles are huge. I gotta go down to the 1 minute. These candles are massive, guys. Wow. All right. Let me get my act together here. Hold on. End of the day trade. I shouldn't be even doing this, but you know, there's your 30 points right about there. Man, I mean, we'll see. Shit, let me get this up here. Hold on. Jeez Louise. These are massive candles, guys. Lots of volume, my gosh. All right. Where's my bearings? Okay, here's my bearings. Let's see. All right. Let's see. When I get in the trade, I'll let you know. Yeah, money flow is looking good on this 1 minute. Money flow is looking nice, juicy, sexy. I like it. Oh, shit. Boy, these moves are... Price is moving. Okay. Go for it. Go for it, Roy. Okay. I'm in. I've been in. Sorry. Looking good. Top of that range looks like a nice target. There it is. All right. Cut down. Half that trade. Stop at break even. Yeah, I could go, but you got to play it smart, man. Type the W in chat if you got another W with me here today, man. These are scalps at their finest. Stu, you got a dub? Beautiful. 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 Ho, ho, ho. Santa gave you gifts early, son. Look at this, buddy. Taking it for another 1,000 for today. Taking it for another G. I got before I show it off, I gotta actually get out of some. I'm gonna peel some back here. All right. I'll peel off another. I'm peeling off 10. You know what? This could just keep going. Oh, there's a nice G. There's 1,200. There's 1,100. Oh, I closed. No, I didn't. I closed 15. I closed 10. Oh, shit. Whoops. All right. Thought I closed all of it. Hold on. That's good. I'm glad I didn't. Keep going up. Oh, man. All right. Now I'm going to close 20. What does that leave me with? That's out. I'm out. P&L for the day, not too shabby. I do what I say. I don't always do what I say, do I? But I say what I do. What does that mean? Yeah, nice little scalp there. That was a 60-point move. Holy mackerel. These candles. I can't get over it, guys. These are insanity candles. The volume on these candles is insane. Insane in the membrane. You know what I'm saying? All right, that was the move. That's all I wanted. It was a little risky, but the 60-point move. Dude, this morning we had a 60-point move, and I was like, oh, that's a 60-point move. That's really big right there. Damn. Okay. Yeah, I mean, I don't know what to say. That was the definition of scalp, in and out. Santa's bringing the Christmas presents home for me. I know a lot of people are getting wrecked today, so I hope that I don't know. I hope that they do all right. You know what I'm saying? All right. So I know Stuart's with me. Anybody else with me? No? Everyone else is like, I'm still holding. I did the long and I'm still holding, man. I don't care if you're out. It's going to the moon. No, you got to be careful. You got to be careful. All right. Money flow index. Look, hidden divergence is here with the MFI only. Right? Previous swing level. Boom. Where's that previous swing? Look at the, if I can get it off. What the hell? Look at that over here. It's around this level right here, right? It's a little hidden divergence. And the reason why I liked it is because I see the same thing with volume, at least up to that swing level, right? Not quite above it, but pretty close, man. Pretty close in there, right? And that's that same area. So, or actually, sorry, this is that area. So it is above it. It is above it. Right there. Right here. So that's a hidden divergence on volume and money flow. So, you know, even though we missed the majority of that pullback, once these levels got above prior swing, it was a little more obvious. Now, I'm not saying it can't go back up. In fact, that's what I would expect. I would actually expect price to potentially fade back, maybe down into like a more of a discount zone. It's 3 minutes to a close, guys. So you're going to see weird price action, but after market, you could push up. Anyways, I never trade this late in the day, so that was really fun. I was listening to FOMC. That was really boring. So I just, you know, glad that he wrapped it up in time for us to catch a move. So, you know, that's pretty much it, man. Just trying to, look, doesn't this move look tiny? Look at this. Like, let me zoom out, right? You're like, oh yeah, what is that? Normally, I'd look at that. That would be like a 10-point move, right? Dude, that is a 68-point move right there. That's insane. Sorry, I keep saying it, but dude, my mind is blown right now. There is so much volume in this market. It's absolutely mind-blowing. So anyways, that was fun. I think I'm going to wrap it up. We heard from Santa. The rally's coming. Don't worry. This is what we do. Took another trade down. Hopefully you guys trade safe. Don't push it. All right. Just be careful because this was a massive move. I expect consolidation, not continuation. But you never know. But that's what I would expect. Some consolidation. I don't think Asia or London are going to move. I bet it's under 50 points, the entire Asia and London session. We'll see. We'll see, because there's no catalyst. Okay. That's it, guys. Hope you enjoyed it. Smash the like button before you leave. Do all that stuff, and see you in the next one. Ciao. How do I turn this thing off? Dude, I'm like a retard in here. What the hell? All right. Oh, there it is. Okay. Got it. No wonder I have no freaking subscribers. Loser.
Inside Out.
Did you hear that?
Meet the team behind Riley's dreams.
Riley's falling asleep. Let's get to work. Dream Team.
Disney and Pixar's Dream Productions. Now available only on Disney Plus.